Here we go.
Money talk.
Here comes the money. Money, 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 money.
Dollar, 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 dollar.
One popular stock that people keep asking me about is the stock Apple. Hey everyone, this is How to Invest King, and I'm here to talk about Apple stock. So, the Apple stock, as you can see, it grows on average of 20%. It grows on average of 20% a year when you calculate all the years from 1986. It has outperformed the S&P 500 when you compare it to the S&P 500 ever since around 2004. That's when the iPhones came out. And when you look at the Sharpe ratio and the Sortino ratio, it's also less volatile than the S&P 500 when you compare it to the upside. The Sortino ratio measures the risk-adjusted return of an investment asset, portfolio, or strategy. It is a modification of the Sharpe ratio, but penalizes only if those returns falling below a user-specified target or required rate of return, while the Sharpe ratio penalizes both upsides and downsides, volatility equally. So the Sharpe ratio is a measure that indicates the average return minus the risk-free return dividend by the standard deviation of return on an investment. This is a pretty good tool that I use myself. So the higher the Sharpe and Sortino ratio, the better. That means there's more upside for profit versus the downside. So generally, the Apple stock is about 50% correlated with the S&P 500. So it follows the S&P 500 by like 50%. %50 of the time, I should say. So when you compare the PE ratio of Apple to other companies like it, it's a lot cheaper. It's a lot more affordable. It's a lot more discounted than other companies. And Wall Street also believes that there's an upside to it. It's also a profitable company, so that's a good thing. And it pays dividends. So these are all really good things. The only thing is the growth is a bit weak compared to its competitors. Slightly. Apple is also 48 million in debt. Less than 1%. It's not expected to make as much. The growth is starting to slow down a bit. When you look at Apple long term, it's pretty much always been growing. So that's a good thing. So you could expect, even though the past performance does not determine future results, if you look at the chart, it looks like it's gonna continue going up. That's how it's always been since around the year 2004 when the iPhones came out. Has a pretty good PE ratio. PE forward is expected to make money, just not as much. Positive earning ratio, pretty good dividend at 2%. The analysts believe that it's a buy. And when you look at the pattern on this graph over here, it looks like Apple is very discounted, and this is a really good time to buy. There's a pretty large upshot for the Apple stock. Even I'm thinking of getting it. I might get some Apple stocks. So everything's been slowing down. Let's look at it yearly. It's been growing a little from the past years. It has a lot more capital, so that's a good sign. Everything checks out. It's a good time to buy the Apple stock. It's profitable, as you can see. Doesn't have too much liabilities. And another good thing is there's fear in the market. Warren Buffett said, "Be greedy when others are fearful, and be fearful when others are greedy." Pretty much, since there's a lot of fear in the market, that pretty much means it's a good time to buy, because everybody else is selling. Everybody's selling at discounted prices. So for this time period, for this moment, I think it's a good time to buy Apple, but that's just my opinion. Let me know what you guys think. Please like, comment, and subscribe. And let me know what stock you guys want me to go over. Alright, talk to you later. Thanks.